It seems like the easy trade to go is to really just continue the carry trade that's been working for a lot of investors that are willing to take on that EM risk. How long is that going to last?
Yeah, that carry trade coming back into play this year with 17 of 23 emerging market currencies rising against the U.S. dollar. This is a trade that we understand, and Citi points out, works very well when we see these U.S.-centric recessions. That said, I really would contrast this with what we're going to hear out of the IMF meetings this going on in Washington this week, which is a much more dismal picture. The weakest five-year growth outlook since 1990. And when we think about this, I really want to point you to Egypt. I'm just back from the Middle East, so this was a story that was on top of all of our minds. This is a country that had one of the strongest carry trades, so again, this hot carry trade, for many years, but now has been forced to turn to the IMF for aid. And one of the things the IMF has wanted it to do is make its currency much more flexible, but that's pushed it into this bad situation where it has this ongoing inflation problem. And so the IMF is really going to struggle, particularly on the frontier, maybe not as much in the emerging market space, to try and figure out how to deal with this. And we're watching really debt crises escalate around the world.